But you have to work with a team that understands the nuances and can allow you to access your money within 72 hours. If you call the insurance company, try and get it done yourself, it's like running east looking for a sunset. All right, folks, check it out. We are out here in Provo, Utah, the second home of Epic at Chris Crohn's UFD event. And by the way, the magic that's happening on that stage is incredible. The folks out here are looking for not only mindset shift, peak performance activities, but at the end of the day, how to become an entrepreneur and the way Chris puts it, how to become a billionaire. There's a lot of things that happen between now and then, and being able to take decades and turn it into days is really what this is all about. We live in an economy where money is important. How we get access to money, how we get multiple use of money is the key to success, provided your mind is right. I'm here with my partner, Eddie Gartner.
What's up, bro?
What's up, Ed? How you doing, brother?
I'm doing great, man.
We're just sitting here talking about the banks, right? And, a lot of times when we look at banks and we think of insurance and how to become your own bank or how to mimic the banking concept, let's take a step back and let's say, Ed, if you and I want to own a bank, one of the things that we have to do is get a surety bond, right? Yeah. We have to do a criminal background check, right? We have to have a good credit score. We have to have a great history when it comes to money. And then, I don't know the exact number, but we got to put like $1 million, $2-3 million up, as I understand it. Yeah. After all that, to get the charters approved, it takes what, 3, 5, 7 years?
Right.
And what does a bank actually do?
So a bank is basically a place where people are storing their money. They feel safe and secure with that money in there because there likely hasn't been a run on a bank in a very long time. And the bank is taking that money and then they're going and lending it out to other people, right? In the form of loans, mortgages, credit cards, car loans, all these sorts of things. So they're taking your dollars and then loaning them off and earning money on your money.
Yeah, so what I'm hearing you say is banks have become the masters at not only giving us an interest payment, right? Very small one, by the way. Yeah. And then loaning that money out over and over again. To Eddie's point, he said between, tuitions, car payments and mortgages. And by doing that, they make on average in exchanges about 40 cents on every dollar that we give them. But can I do the same thing in a life insurance policy? Because I want to show that there's a difference. Not only the bank makes certain things easy, but the banks also don't give you, the person that's putting that money into that savings account, multiple rates of return off each and every dollar.
So if the question is, can you put money into a life insurance policy and then go and take that money and leverage it out and go do other things with it, buying cash flowing assets or certain things like that? The answer is yes.
And what does that mean to the person that's watching?
So if you're looking at a cash flowing asset, to me, that means something like real estate where you're getting cash flow off of that real estate, right? You own a piece of property, you have a renter, that renter is paying you, and there's a cash flow above and beyond any payments that are on there. It could also be a business, right? A lot of people use this to help accelerate their business. Maybe you need to purchase different equipment for your practice or anything that's going on in business. So to me, cash flowing asset could be anything that is paying you money each and every month.
So if I'm going to draw a direct comparison, I have $200,000 in the CD, right? Yeah. And I take 100 out to go buy a piece of real estate. Yeah. I'm only getting that 1.5% that's left in that CD, correct? So if I had 200, now I have 100, I'm getting 1.5%, right? If I have the same 200 in cash value life insurance policy and I borrow 100, that cash value is going to get between 5 and 6%, even after I borrowed the 100. Yes. Both the 100 in the bank and the insurance is going to real estate. So those rates of returns are the same. Right. However, inside the insurance, to borrow that money, it takes about 72 hours. To open up the borrowing off of the CD, I have to break the CD, right? I have to break, if it's a 6-month CD or a 12-month CD, I got to break the time in order to borrow that money, right? So I can't just start the CD and borrow it tomorrow, right? So what I want to really be able to share with these folks is the difference of a bank and an insurance. The bank makes it easier, it's glossier, it looks pretty, you get the bricks and the mortar and all that other stuff. But the insurance is really, if you want to become your own bank and get multiple uses, is in the long term a better way to go with your money. Is that a fair statement?
So because if you break that CD early in that contract, you might not even get the interest that was being earned on it, right? Because sometimes they penalize you because those CDs, it's what the banks call a time deposit. So they're expecting you to keep that money with them for a certain period of time. So if you don't keep it there for that time, they may not even pay that interest on it when you break it. When you're using life insurance and you're utilizing taking money from that, it's a much different mechanism, right? With, like Rob was talking about, depending on the company, when you leverage money out of there, that money that you've leveraged out is actually still continuing to grow inside of the policy. Wow. And that's specific to certain companies that we work with.
Amazing. And the banks make it easy because the ease of use is there, right? You know, you can take money, or you can move it on an app, the whole 9 yards. But on the insurance, I think a lot of folks don't realize that. And once again, you have to work with a team. I'm not saying that we're the greatest team, but you have to work with a team that understands the nuances and can allow you to access your money within 72 hours. If you call the insurance company, try and get it done yourself, it's like running east looking for a sunset, right? It's like Chinese divided by diarrhea, right? I'll say it again. It's like Chinese divided by diarrhea. But if you have a system in place, it becomes a lot easier. Yeah. Can you talk on that a little bit?
So I think one of the biggest things that comes up for people, especially when it comes to working with banks, is, you know, in the space of real estate, and we work with a lot of real estate investors, they're always talking about taking a home equity line of credit. And so the thing that certain people don't understand or don't even think about is you have to qualify with the bank to be able to borrow money that is equity that you have in that house.
How do you qualify?
So it has to do with how much income you earn and your debt ratios, right? So there's a lot that goes into that calculation. And I was working with a gentleman who, him and his wife, they had inherited a property. The property was 100% paid off. $900,000 is what the property was worth on a canal in Florida, right? Beautiful. The bank would not loan him money against the equity of the house because they said his debts were too high. His income didn't support it. So even though you have equity in a home, it's not a guarantee that you have access to that money. That's far different from the way life insurance works. Any money that's inside of that policy, you have direct access to, and the life insurance company can't tell you yes or they can't tell you no, essentially. That's your contractual right to that cash value.
Well, so I just want to make sure I heard this the right way. There was a guy that had a house that was paid off for $900,000. I'm making up a number right now. He had $200,000 in credit card debt, and maybe earned $50,000 a year. And because of that, they wouldn't let him borrow money from a house that was fully paid off.
Yeah, exactly.
Because his monthly cash flow from his job couldn't cover it. Unbelievable. Didn't know that. Well, anyway, you're sitting here. You're thinking, how do I do this? Does this make sense? You know, is that really true? Is it really like a bank? Well, go ahead and click the link below. One of the team members here at Epic, no obligation on your part, will take you through that conversation, what we like to call the success formula. And at the end of that conversation, you'll know if, in fact, it makes sense or not. And we're going to really map it out for you, show you where you want to go based on what you share with us. And at the same time, we're going to show you, because a lot of people don't know this, where they are or where you are on that map. Go ahead and click that link below. We'd love to be able to serve you.